Hey guys, in today's video I wanted to talk to you about this morning's ICT Judas swing trade that I sent into the signals group, which ended up going up 1% but then taking us out at break even. Now the reason why I want to highlight this trade is because there is a little bit of story time that goes along with it, and it's all to do with being on a losing streak. So stick until the end and we'll talk about the psychological factors that go into being on a losing streak. However, for the time being, let's jump straight into the analysis of the trade. So first things first, when trading the ICT Judas swing model, if you haven't done so already, I would highly advise you going down in the description and downloading this free Judas swing framework that I've created so that you can follow along and frame your trades up perfectly using this. And whilst you're there, if you also hit the like button, leave a comment, and also subscribe if you haven't done so already. So let's jump straight into it. And the number one thing, or the first thing that we have to do when it comes to trading the Judas swing, is figure out our directional bias. So as you can see, it says that for the directional bias, we are on the 15-minute time frame, and we're using the 15-minute time frame to figure out our directional bias. So let's jump onto the charts and see where we are. On the 15 minutes, what we've got is a series of higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, and a higher high. So clearly we are in a bullish market. Therefore, what are we looking for? We're looking for buys. So now that we've got the directional bias, the next thing to understand is that the Judas swing happens at the end of the Asian session between 7 AM UK and 9 AM UK time. So that's our trading window. And now the third step is that we actually have to mark out the Asian session highs and lows as shown like this. So the Asia session is actually now going to become our liquidity. So we mark out the Asia session highs and lows between midnight and 7 AM UK time. So update this according to your own time zone, but we simply just mark out the Asia high and low between midnight and 7 AM, and then we just wait. We simply wait for a sweep of either the high or the low, and then we move on to the next step. So let's quickly do that now. And to make my life a little bit easier, what I'm actually doing is I am using an indicator called the Asian Session Range by Rob Minty. All it simply does is it just marks out the Asian Session Range for me because I've configured it for it to start at midnight UK time and end at 7 AM UK time, so I don't have to manually do it myself. But what we'll do is we will also take our line tool and mark out the Asia low. And then we will also mark out the Asia high. So now that we've marked out our Asia high and low, now we move on to the next step. After we've got the next step, which is going to be a market structure shift. So we wait for a sweep, and then we wait for a market structure shift on the 1 minute time frame. So next thing we have to do is drop down to the 1 minute, and now we wait for a market structure shift. However, I've taken this one step further, and in today's trade what I actually did is I marked out an area of confluence. So what I wanted to do is I wanted to see price come down here before giving us a higher leg. So the reason why I've done this is because I just wanted to add a little bit of more confluence into the trade. So we know that we are bullish, therefore we want to see a higher low formed and then a higher high. So we want the higher low to form down here, taking out the Asia lows, so that we get a market structure shift on the 1 minute here to take price higher, right? So what I did is I actually identified an area of interest, as we can see down here, which I was anticipating price to come into. Now, why did I mark out this area specifically? So the reason why I chose this area specifically is because if we take a fib from the low to the high of this entire move, we can see that this range falls just below the 50%, meaning that it is in the discounted zone. Also, we've got the Asia liquidity just above it, which means if price comes down, it's going to liquidate a lot of orders sat right below this Asia low, coming into our higher time frame area of interest, giving us more confluence that if we get some sort of market structure shift in here, we would be anticipating much higher prices. So I had this area marked out, and then from then on we go back onto the framework, and now we're simply waiting for a market structure shift. So if we drop back to the 1 minute, we can play price on and we can see what happens. So let me just quickly refine this as well. So as we can see, this candle right here was the highest point of the entire Asian session range. After this, we get 7 o'clock right here. Therefore, this would be our highest point of the range. Therefore, this is nothing valid that we're looking for. So now we play price on, and as we can see, our bias is now playing out. We are bullish. We want to see a sweep of the Asia lows into this area of interest. And the other thing that we have to also notice happening right here is that we get this fake market structure shift. We get the immediate tap right here into this area of interest, but then we get this fake kind of market structure shift, which influences a lot of people to get in here as a smart money trap, goes up a little bit, and then liquidates all of those people. So that is a fake market structure shift. That is a smart money trap. And the easiest way to avoid this sort of smart money trap is to realize that this wasn't actually a market structure shift. As we can see, this is our now lower low. This is our lower high. And then this is just complex structure. This is nothing valid because this is our high and this is our low. So therefore, in order for us to get any sort of real move, we have to break either this high to give us the real market structure shift, or continue lower, showing us the true hand of the market. So then when we get a break lower, we can now see that this is now the actual sort of area that we're looking for price to give us a market structure shift from. So now what is our range? We've got the lower low, lower high, lower low, lower high. Therefore, we're either waiting for this high to break or this low to break to give us continuous lower prices. So that is our range. So let's play price on and see what happens. And there we go. Price gives us a break right here. And that means that we've actually now had a market structure shift, because we've gone from doing a lower high, lower low, to now giving us this higher high. Therefore, what we would anticipate is a higher low into a fair value gap or a order block before giving us higher prices. So that is how I was viewing the market, and this is also visible on the 5 minute, because now once we drop down to the 5 minute, what we can see is we've got the lower low, lower high, lower low, then we get this complex structure and a break of this high right here, giving us a valid market structure shift. So now that we've got this, what is our next step? For that, we go back to our framework, and the next step is, once we've had a market structure shift, we need to identify our fair value gap in order to take an entry. So now let's identify our fair value gap, and I'm sure a lot of you have already identified where it is, and it's right here. So this would be our fair value gap where we would look to take an entry from. So the next step is we will take our entry at the start of the fair value gap. Our stops will always go above the most recent high or low, and our target will always be the opposing liquidity. So if we are taking a long from this area, we would put our entry at the beginning of the fair value gap with our stops just below the most local low, just like that. And then we would be targeting the opposing liquidity, giving us a nice 1 to 2.85 risk to reward. Right, that's everything done. We've now completed our analysis of the market. We've marked out our trade setup. We've put in our limit orders, and now we're simply just going to sit back and let the market show its hand. Market goes up, comes back, gives us this beautiful tag, nice sort of push away, and this was giving me a lot of confidence in the trade. We get this beautiful push up, and this is the time when we were 1% up, and I said to everyone, go break even to be safe, because I didn't like this sort of chop that was going on here. And from there, we can see that price came back, took us out a break even right here, just there. And then from then, price just collapsed. So it took us out. So this break even helped us to not take a stop loss and not lose any money, because we were able to read the markets and understand that this chop is not a good thing. This is indecision. Price is unable to break this high. Therefore, we know that price is going to be unable to get up here. So we went break even, mitigated our stops so that way we can live to trade another day. So that was the trade today. Unfortunately, it was a break even, but at least it wasn't a stop loss. However, for this month of January, we are already up 5%, having accounted for the losses that we've taken this week. And 5% in such a slow month is absolutely amazing. All of the members in the group are also up 5%. So it's great to see that everyone is having such good luck with their trades. But speaking of having losing trades, I just wanted to say a quick message about if you are currently on a losing streak, or if you are somebody who's going through taking heavy losses, what I would say is just understand that your trading is very probabilistic, right? Think about it in terms of statistics. Now, let's say that you have a 70% win rate. That means out of 10 trades, you are going to lose 7. So let's say you have 10 trades, 3, 4, 5, 6, 7, 8, 9, 10. So you've got a 70% win rate. That means 3 of these trades are going to be losers. Regardless of what happens, you know that with a 70% win rate, 3 of these trades will be losers. Now, they can be one after the other. So you get 1, 2, 3. That's your losing streak. And then you have a couple wins. Or it could be a loss here, a loss here, a loss here, right? It doesn't have to be consecutive. However, you know that based off of probability and statistics, you're going to win 7 trades. So even if you start the month off or you start the week off and you take 3 losses, don't let that dishearten you, because you know that you've got this win streak ahead of you. So for anyone who's going through some tough times because they are, losing a couple trades or going through a losing streak, I would just say go back through your data, go back through your journal, make sure that you're actually taking higher quality trades and it's not affecting your mentality where you're ending up taking some lower quality trades. And if you are just sticking to your trading plan but you're still losing, then just understand that it's just probabilistic and it's just statistics. You will come back to winning so long as you follow your plan and you don't deviate and you don't start taking lower quality trades. Your win streak is just round the corner. So if you are losing, just go back through your journal, go back through your data, understand where it is that you're going wrong. And if you can't see any mistakes, then just know those losses are just part of the game. Don't let that dishearten you and continue winning like always. So I hope you guys enjoyed that video. And if you did, please don't forget to leave a like, comment, and subscribe. And I'll see you guys in the next video.